another question that I often think about and advise clients on is, so you have a partner, you're married, okay, great. What happens if they get sick and you're in the startup phase? Thank you for listening to the Interesting People You Meet podcast. This podcast is sponsored by Newground Financial. Newground Financial is a full-service investment and insurance brokerage firm that specializes in employee benefit plans, corporate insurance, and retirement planning. Newground Financial serves the provinces of Nova Scotia, New Brunswick, PEI, Ontario, and Alberta. Find out more at newgroundfinancial.com. Thank you for liking, sharing, and commenting on the Interesting People You Meet podcast across all of your favorite listening platforms, including Apple Podcasts, Spotify, and YouTube. By doing so, you are ensuring that more great people just like you have the opportunity to hear from our guests. Thank you, and enjoy the show. Welcome to episode 33 of the Interesting People You Meet. We have guest host today, Nick Matheson, and myself, Nick, joining you here today. And we're very excited to talk about something that we talk to clients about every single day and that I've been talking to clients about for years, is really insurance coverages through the various stages of business ownership. And we view those in really three simple ways: as startup, growth, and maturity. And ultimately, what we want to talk about is how a business owner views insurance at these various stages from our experience, what some of those concerns may be, how some business owners might not even think about it at all until they have a good advisor in front of them, and to really clearly illustrate why you may want to consider certain coverages at startup, growth, and maturity, and how they can differ. It doesn't have to be the same coverage throughout that whole process. So Nick, welcome back to the podcast. And let's get started.
Thanks for having me again. Happy to be here.
Yeah, absolutely. So why don't we start with startup? Business owner starting a business. We can probably tell a few stories here. We won't share some names, but ultimately, paint a picture of someone coming up with an idea of a business. They launch it, they perhaps have business partners, and maybe they need to get some funding for that business. It could have some bricks and mortar involved or just some technologies that are required to kind of get the thing off the ground. And this business owner, let's say potential partnership, have all left previous positions where in those positions they were covered by employee benefits programs, pension plans. They had life insurance and long-term disability and health and dental and drug coverage for themselves and all of their families. And now today, they have a business that they just spent a bunch of money for. They have barely any income, and they have no foundation of protection in the event that they can't earn income and or that they get sick or injured. So what do? And this is what we do. It's a facet of our business, is helping business owners understand and think through these potential consequences of not being properly protected. So, Nick, what do you got? Do you got any ideas in and around this in the startup phase?
I think the key phrase that you use there is foundation of protection. And really, insurance is all about risk management. And it's, entrepreneurship tends to be pursued by people who are fairly comfortable with risk in many ways, or they wouldn't go on that journey. But they tend not to really pay attention to those risks. And then at different phases, there's different pressures and stresses that may take them away from focusing on different elements that are important. Certainly in startup, income protection is part of it. They're really trying to get something going, and revenue growth is what's most important during that phase, finding that product market fit. And having come from the experience that you just talked about, where they may have had coverage in various ways, to recognize that they do need to protect themselves for the eventuality that they may not be able to perform in the business. Generally, at that phase, they are the founder is very much the key person in the business. And if something were to happen to them, it's disastrous to the business. So looking at solutions to protect both themselves and the business are essential.
Absolutely, for sure. So some of the areas that we see, or some of the areas that we try and coach, those in the startup phase, uh, let's start maybe with debt. So, you have to secure a loan for whatever amount, a quarter million, a million or more, to get your business rolling. And say you're the founder and or there's other partners involved who have an equity position that's substantial enough. One of the biggest things is to insure that debt, and we insure that debt by using life insurance and or critical illness at the same time. Life insurance, effectively, in the event that Nick and I are business partners and we have a loan for $1 million and I get hit by a bus tomorrow, well, it would be nice if I had life insurance on myself for the total amount of that debt, or at least my share of it, that Nick is now not burdened with my half of that or the full debt itself. And most insurance carriers will accept either version of that, so securing my half of the debt or the full amount. And now Nick's not, carrying this huge loan because I'm out of the picture, and he, presuming we're bringing an equal share to the business. If I'm out of the picture, well, his hands are a lot more full than they were the day before that happened. So having the financial means to pay off a debt and eliminate that and not have that, that stress is very important. So, using life insurance to cover off debts in the early stages where you may not have huge cash reserves, it can pay dividends in the event that, in the unfortunate event of a death of one of the business partners and or just the key shareholder themselves if there's no other partners involved.
What do you see
Furthermore,
with, sorry, Nick, what do you see with funders requiring insurance on debt, and any perspective you'd offer around creditor kind of insurance in that sense?
yeah, absolutely. I mean, from the major lending institutions, a lot of them are going to want to see those types of coverages, perhaps life and or critical illness. So for those of you who don't know what critical illness insurance is, in short, it would pay out in the event that an insured individual had a medical event like a heart attack, cancer, stroke, kidney disease, paralysis. There's a list generally on a comprehensive plan. There's a list of about 25 to 30 coverages that would pay out a lump sum. So these, creditors, absolutely, financial institutions are looking for protection on that, because if you're not around to earn money, then they're not going to get their money back. So yes, there's definitely requirements for that. Sometimes those institutions will try and sell you that product. We're a bit biased, but what we know for sure is generally by using a licensed life insurance agent in Canada, that you could probably get a better rate and or more comprehensive coverage dealing with an insurance agent than you can through the financial institution itself. No offense, we like those institutions when we need them, but go to a licensed advisor.
It's good to have the complete picture rather than just kind of the incremental pieces that might come from different transactions that you're doing during that phase as well.
It's really true. And I think that's one of the reasons why we like to put this content out there, is because, you get caught up, oh, wow, we're actually approved for the loan and we can make this dream come true. And you just sign your kid's life away. And all of a sudden you're like, oh, I shouldn't have done that, or that's not the best coverage. And oftentimes what I've experienced with business owners, if say, we launched a business, we weren't in this business a year ago, we had secured a debt, we used it through a financial institution, we wrote our insurance through there. And then some insurance agent, we meet them at a networking event and they're like, hey, why the heck did you buy that coverage? That's terrible. It might not even pay out if you die. It's very expensive. And then I'm like, yeah, but man, I got all this other crap on the go. I just got back from vacation. I don't want to do medical underwriting. I don't have time. And next. And this is unfortunately what we see, because I'm a business owner, Nick is as well. So we're very busy, and I can understand that. But my goodness, if you're a business owner listening to this, like, this is one of the biggest things that builds that foundation of your protection on your whole firm. So you can get busy, you can, put all the systems in place and hire all the people and do all the sales and the million things you need to do. But you really have to take some time and reflect and think, if shit hit the fan, am I protected? And a good insurance advisor can really help ensure that you are, not only you and your business, but also you and your family outside of your business, which perhaps is a natural progression of what we could, look at here in the next couple of minutes.
What would you say about buy sell in the context of shareholder agreements and business partnerships and that kind of thing too? Is that something you see as important in the early stages of a business?
I think so, absolutely. I mean, buy-sell agreements are generally baked into, a shareholders agreement that's written up by the lawyer. It's rare that any business owner, I think, actually reads those. They just do it because they think they need to. And most are boilerplates from the legal offices anyway. No offense. If you're not, please reach out to us. We'd love to have you on the podcast to see how you're unique and interesting. But, you know, they're often overlooked. There's been many times when I've, one of the first things I ask a corporate business owner is send me your shareholders agreement if they have partners, and we read it and it's like, okay, this happens and this happens and that happens and could be financed by insurance or should be financed by insurance in the event of life, critical illness, disability. So it's written in there. The lawyers generally don't enforce it. The accountants don't. And the business owners just kind of go, oh, I guess we're covered. And you're not until you put the proper insurance in place. So, buy, sell, basically, again, Nick and I are partners. Something happens to him, so he passes away. He becomes critically ill or disabled, so therefore he can't spend as much time or any time in the business due to this injury or illness. Well, there's mechanisms in insurance that could pay out a lump sum of coverage to the company to effectively replace Nick's earning power or brain power, in this case with Nick Matheson, to the to the organization. And that's huge, and it's there. It's in your contract. You should adhere to that, or at least consider that, and talk about that with your business partners. And it's reasonably cheap. Like, I mean, if most of your business partners are relatively young and healthy, to put a pretty significant amount of life insurance and critical illness is like it's pennies relative to what you're going to be earning in your company anyway, to protect the longevity, the legacy, and all those things of your business, especially your employees as well.
Well, I think sometimes in partnerships, there's this, and it may even be written into the agreement, the assumption that one would buy the other out, and then they don't go that extra step of thinking through, well, how would that actually be funded? Right?
Great point.
And again, particularly in the early stages where the business isn't necessarily cash flowing and they've just invested or taken on debt in order to do that, the partner may not have the means to do that if they haven't kind of insured that risk. So
absolutely, and the insurance can generally, be, again, it's not always the case, but it could be a better investment for you than at the time of the event happening, going to a financial institution and saying, can I have a loan to buy out this person, especially with interest rates and whatnot today. In the early days of owning an insurance policy, if something happens to a partner, your rate of return is quite significant for the dollars you invest in it. So, yeah, great point.
One of the things that I saw in a startup that I was working with, kind of a high growth startup and kind of looking for venture capital and so on, and in that phase where they're trying to get to revenue, everyone that joined the company was looking for benefits. It's really become a key mechanism of attracting and retaining talent and building teams. And of course, startups may struggle to invest in that when they're pre-revenue and so on. So that balance. But for those that do make that decision, that is an important pillar of how they're going to attract talent and build their teams. What would you say to the business owner about covering their risks through a group plan versus having kind of individual coverage as the owner itself? How does that kind of work, and what's the best kind of mix in that sense?
Yeah, I mean, we offer and provide a lot of group benefits coverage to many businesses across the country. We love it. For a business owner, I generally suggest you protect yourself with individual policies for life, critical illness, disability. It can be owned by your business or your holding company, but there is some gaps in a group benefits policy that could, that it's not the sometimes the best for a high income earner who's generally the owner of the business. So, depending in the early stages, an employee benefits program, because we're under 10 lives, the insurance companies will only give us so much life insurance coverage or so
Right.
much long-term disability coverage, which could cap us out. So if I earn 150,000 or 250,000 in my startup, and the insurance company says, well, because your group's new, your company hasn't existed for a long time, and you only have 5 employees, we'll give you $2,000 of coverage or 5,000. Well, that's significantly less than what you could get out on the market owning your own policy.
Mhm.
So generally, and I personally, so we have benefits. At Newground, I own my own life insurance, critical illness, and disability policy outside of the benefits realm at the company, because those are substantial to cover my income. It protects my growing income, which is important, and it's the most comprehensive coverage that I can get. So that's what I've chose to do, and that's what I advise our business owner clients to do as well.
Mm. And we've seen a couple of cases where people may not even pay attention to the details of what their coverage is in a group plan and
Yes.
not really know that those, they assume that they have life coverage or disability coverage, but haven't really looked at the details of what that coverage would actually entail if something were to happen.
It's true, and let's just talk about one in particular that's a huge pet peeve of mine that gets overlooked, not at the disadvantage, not because the business owner isn't smart, but what happens is smaller businesses generally sign up with these association type benefits programs. They're easy to do. They're heavily marketed. They're relatively cheap, it seems, but they get no service. So there's never really an advisor on the other end going, you know what, Nick Matheson. Let's take a look at your policy and see what it is. Great. It's $600 a month for your 3 people. Awesome. Do you know that it only covers $10,000 worth of drugs? And that if you or any of your family members ever go on a medication that costs more than $10,000, you're on the hook for the difference. And especially here in Nova Scotia, our family pharmacare program under age 65 is income tested. So if I'm starting a business or if I'm a few years in and I'm making some bank and it's going well as the business owner, and all of a sudden one of myself or my family member goes on a medication that costs, $100,000 or $30,000, and I'm in one of these benefit plans that only covers up to 10,000, that's a significant gap. And then I go to the province and I got to type in my income, my gross family income or net. And the province says, okay, great, we'll cover the rest, but you first have to pay $30,000. So where are you going to come up with this cash when you've got loans, you're bootstrapping your business, you're trying to pay your employees on credit cards and all the crazy things we do in the early days, and you're not properly protected. So my point is, in the early stages, it's super important to sit down with a qualified insurance advisor, especially, on the benefit side, sit with a qualified benefits advisor. We are that here in Nova Scotia and Atlantic Canada and across the country. We can help analyze your program so you better understand what you have. So you're not, running into one of these situations and going, oh, wow, I wish, and I've heard that way too many times. And then it becomes a blame on the insurance carriers. Oh, why are they doing that to us? Or, blaming the government and all these types of things. Like, it's just important to listen. We buy home insurance in case our home catches on fire. It's worth sitting down with a qualified advisor to have them sit and outline the risks. And we do that every day, and not everyone buys everything that's available to them to really build an amazing foundation. But, if you can build it as good as you can, then it's better than not.
Well, and beyond the business owner, that issue of high cost drugs brings it, larger companies that are growing and have invested in a group benefits plan. The design of that plan is really important as well. I'll kind of consider those things. And we've worked with some business owners who have had pretty significant liabilities and costs build up in their benefits plans because of the way those coverages have been structured. So
Of course, and there's ways to structure them that's advantageous for the business owner and the rest of the employees. Maybe even there's a cap there, but there's having that full conversation to understand what in particular, the higher income earners should have versus, the rest is very important because, yeah, I mean, that can sink a business and an individual pretty quick if all of a sudden you're on a very expensive medication. Yeah, health benefits, life benefits, critical illness and disability are very important in those early days inside of the company for yourself and your partners, as well as outside for you and your family. Like another question that I often think about and advise clients on is, so you have a partner, you're married, okay, great. What happens if they get sick and you're in the startup phase? And you don't have a lot of cash flow. You just gave up everything. You probably remortgaged your house or you whatever it is to get this thing started because you're so passionate about it. And now our partner or anyone else in our family, passes away or gets sick. What are you going to do? Is your mind going to be fully in your business while they're in the hospital? Probably not.
Nope.
And exactly, right. And if so, what would happen if you had an influx of cash? That doesn't make this person healthier tomorrow. It doesn't eliminate the problem, but it does eliminate a problem, which is personal and corporate financial and cash flow. If you receive a lump sum check of X, and now you're able to, willingly and spend time with that individual who you'd probably do anyway, and your business is looked after because there's cash flow and or your household expenses because you've got this lump sum of money from, say, a critical illness policy or a death benefit, that can be a game changer. I would assume emotionally. I haven't gone through this and I hope I don't. But also just to eliminate that one other thing to think about, well, we really want to bring our family member back to health as soon as possible. And critical illness is another great version of, like, what if the treatment here you didn't really like and you'd rather take them down to the Mayo Clinic or Duke or to, to somewhere in Canada, to another teaching hospital that may be more expedient on the diagnosis and or treatment. Those are all things you can do when you have money, and you can do that for a pretty low cost by using insurance. So, I hear many times business owners go, I don't like insurance and blah, blah, blah. And yeah, sure. And I don't either. I don't like it. I don't like paying a bunch of money every month to insurance. And honestly, a significant amount of income that I pull out of my company goes towards protecting our family with insurance. And I don't like that, but I like what it could do for me in the event that it happens. And I think that's very important. And that's a message that I want any business owner to know. It's not a sales pitch. It's just, you would never complain in the event that you had these things in force and something happened, for sure.
Yeah. Well, as you know, 20 years ago, I did face critical illness with one of my children and wasn't insured. And it was a pretty pivotal moment in my entrepreneurial career, and a big life lesson for sure. And thankfully, she's doing incredibly well 20 years later. But
amazing.
It's just an example. We would never have thought about even. It wouldn't have occurred to us to think about covering our children for critical illness at that phase in their lives, and it was a journey.
It definitely is. Yeah. So, I mean, Cole's notes on that, what we've done in our family, and anyone else has a different opinion, let me know. I'm always curious, but we've protected our income, mine and my wife's, in the event of our death. We've protected our income in the event of an illness or injury via critical illness and disability. And we've also done the same for our children. We have a small amount of life insurance on them in the event that anything ever happened. We'd be able to cover off those expenses and take some time off work to grieve and that type of thing. And furthermore, we've put critical illness insurance on each of our 3 children to an amount that, replicates one or multiple of our salaries on an annual basis, to know that we could just back off and not have to draw income from the business, et cetera, and be there and not have to worry about that financial and, GoFundMe pages and all these types of things, which some folks have to do. And it's not a judgment at all, but, there are ways that, if you have the means today for a reasonable, price, you can protect yourself and your family and your business.
Well, when you talk about not liking insurance, and I get that, but also a learning that insurability is actually an asset, and it's easier when you're younger and you're not thinking about kind of these risks so much as you do when you get a little bit older.
Well, and yeah, so that's another great tip is, I got into this industry when I was 21 years old. I just graduated school, and as quick as I could, based on financial, because insurance is financially underwritten to some degree, so you have to have an income. But once I did, I loaded up on as much coverage as I could. And I bought a bunch of term insurance, which is really cheap. It's not this power whole life stuff that you'll get rated on Facebook from other advisors who try and sell that to you way too young. Um, but then this term insurance is cheap. You've got it. If you get sick or you have some sort of funky condition, which you can between age 21 and 36, that may change insurability or whatnot, then at least you've got it. And then you can convert that coverage in the future. So earlier is better. Load up on term. And then now you've got sort of a clean slate, something to play with, so to speak, as you add children to the picture and buy a house and have multiple businesses and all those fun things that us crazy entrepreneurs like to do. So
you mentioned Power Whole Life, and in the context of kind of your business growing and getting to a different stage, sometimes insurance actually becomes an asset class that makes sense for a lot of individuals that have larger income or stable cash flows, and they want to kind of make that investment. Do you want to speak a little bit about that, and maybe even connect it to convertible policies where term may make sense at one phase, but at another point in your business you might want to review that portfolio and see what makes sense at that point in time?
Yeah, it's huge. I mean, so a couple of business owner case examples is, startup a few years ago wrote like a pile of term insurance on them. Now their businesses are thriving, and they've restructured their organization so they don't only have an operating company, they have maybe a family trust and a couple of holding companies, and their accountants have done all their magic and have them kind of set up to accumulate wealth. One of the things that I don't see advised too much is like, where the heck do you put all this stuff? And, so if one was to load up on term insurance in the growth stage, because you're protecting debts and you're protecting your income and your ability to earn income for your business and your family, as you move into growth and maturity, at some point you might not need that term insurance for those same reasons, because your debts are paid off and your cash flow positive. You got a bunch of money in the bank. And now you've filled up your RRSPs and your tax-free savings accounts, and you've got open investment accounts, and you're going, where the hell do I put all this money? And how can I do it in a tax-efficient manner? Well, investing inside and or outside of your companies and your holding company can make a lot of sense. And we've experienced it just in the past few years with the volatility of the markets. So what a lot of, ultra and wealthy individuals do once they've kind of filled up all the other means for savings is consider using, permanent insurance, power and whole life as a means to invest. So, when bond markets are down 10 or more % in the fixed income category last year, par and whole life policies were up 5, 6, 7% as a rate of return in those policies. So what a lot of wealthy individuals are doing is saying, let's take a piece and a portion of my wealth that's invested in fixed income and move it over to insurance. There's really neat mechanisms that you can do as well, that you can borrow. You can pay your insurance premium and use it as collateral to the bank. And they'll basically give you a loan back on your premium to then reinvest in your business. So effectively, you were going to spend $100,000 to expand your business, or $1 million or whatever it is. Well, now you can protect yourself with insurance, pay the premium, effectively get most of that money back to reinvest in your business, and your insurance premium, therefore, is pretty, is reduced significantly and or free in some cases. So it's a pretty neat tool to use. Again, it's not for everyone. I kind of shit on it a little bit when I was talking about it being sold to younger people, and I still am a believer in that. But once you have a pile of money and you're wondering where to put with it, what better vehicle than to put $1 into an insurance policy? It grows tax-free, and there's mechanisms to get it out near tax-free in the future for retirement, for borrowing to buy that investment property or the apartments or all the other stuff you do when you're like flush with cash. Philanthropy is another tool that it can be used for as well. If you were to give a million, if you earmarked $1 million for charity when you're to pass away, you can do that in cash, which can get pretty expensive if you're cashing out investments or having to sell off assets to do that. Or you can pay a small portion of that $1 million, maybe $250,000 or $500,000 into an insurance policy over 10 years. And now it can pay out $1 million or more when you die, because these policies grow over time with the dividends inside. So again, this isn't advice. This is just some theories, concepts, and ideas that you should be speaking with your advisor about. And if they're not talking to you about it, you can definitely talk to us for sure.
Well, one of the things I've appreciated about learning more about life insurance and working with you and your knowledge around this is that sort of lifetime perspective. And you get that whole idea of the business life cycle, but there's also the succession planning and the estate planning pieces of that as well, which insurance can be a really important and helpful tool to manage some of those risks. We talked about startup where risk is really obvious, but at those later stages, there's a lot of risk of how you transition wealth out of a successful business and into those other assets, and to be thinking long term around how you're going to support your family or whatever legacy you want to invest in as well. So.
Absolutely, and it's like one of the points I've been thinking about this a lot, and it's just the importance of dealing with a firm and or a team of advisors under a firm or who are connected that have a lens of what we've been talking about, from startup to growth to maturity and the whole picture. Because when you start a business and I get in front of you, just because I'm weird like that, I'm going to maturity already and thinking like, what will Nick look like in 25 years? And how do we need to get him there? And we can't fire hose you with all this crazy stuff we've just talked about today, but those are the steps we're taking in our mind to help coach you through this process, to protect you and your family and your business, to help you grow wealth, and to help you protect that wealth in the future, to give it to transition it to future generations, and do that in the most tax efficient manner. So if you can do that with one firm or one advisory, so this is a team of accountants, lawyers, investment advisors, insurance advisors, benefits advisors who get together and say, you know what, here's the picture we can paint for you. We can work in hand. We understand where each other's at as far as the advisory team, and we're going to surround you and really help you, get your business off the ground, grow it, protect it, create wealth for yourself, your employees, transition that to another generation or another owner in the most tax efficient way, and retire in a tax efficient way. Like that's the path. That's the glide path of kind of business ownership. And there's no reason why a business owner should have to do that on their own and try and figure all of that out and read 1 million books and go from there. We can ideally, and surprise why Nick Matheson and I are on the same podcast and working together is we believe we can make this turn into that, shorten that timeline, and really outline a path for the future, rather than, oh shit, I've got 20 appointments today. I'm trying to make money in payroll and I don't know where I'm going next week. Like that's not a great spot to be in. And it's probably, Nick, correct me if I'm wrong, a spot that a lot of entrepreneurs are in. And from your coaching perspective is kind of running around and trying to figure out what the heck to do next. You need a coach, you need an insurance coach, you need a financial coach, you need an investment coach, you need a business coach, you need a personal trainer, all these things. You don't maybe need them, but it's a hell of a lot easier if you have them.
Well, you need advice and you need information, so it has to come from somewhere. That support is essential, and a collaborative approach where those advisors are somewhat on the same page and the client is at the center of that. And understanding the journey of a business owner and the specific needs of that person and concerns of that person at different phases. And they're all different, but there's some characteristics of what issues they're facing at different times. And it's less about kind of being product focused and really understanding what is important to them, what solutions are needed, and when those make sense. And to your point, I think our collaboration has been really helpful to broaden my understanding around the financial advisory world and that intersection of business growth and personal financial advisory. that can be really beneficial for our shared clients.
Absolutely. And not to pump your tires too much, but same idea for me as I'm in this growth stage of our business and bringing other advisors in. It's like the importance of what you do for business owners is huge. And I've experienced that in our, working together and working with, our joint clients, is to see like there's more to this picture than trying to figure it out all of yourself. And it is helpful to, to enlist advice for sure. So, don't be scared to reach out. It doesn't have to be us. We love it if it was, but this is episode 33 of the Interesting People You Meet. And we've just talked startup growth and maturity for business owners, how to build that foundation of protection for yourself, your family, and your other shareholders, as well as painting a picture for what things can look like in the future. So thanks for tuning in, and we'll see you soon.
Thanks, Nick.